So, a few key themes for today. The first one is discipline. I have been disciplined in not trading too much in a clear market downtrend. However, I've not been disciplined in showing up every day looking for trades and analysing how I can do better. So there has actually been a few strong sectors, which we'll come more to, such as shipping and energy, and there has actually been money to be made. Maybe not too much, given conditions, was probably saying that small position sizing is the best way to go, but that doesn't allow me off the hook. I really could have been more active during these times. So one thing I'm going to aim for this week is to post a video every day. I've got a sort of a checklist of all my scans and everything I want to go through every day. Place trades, even if they're just tiny, but if they're there, I just need to take them. Okay, so the other thing I went through is obviously Mark Minervini had a huge year last year. I went through some of his trades that was posted by Richard Modlin. So yeah, really interesting. One very consistent thing that it seems that I'm not doing so well is, well, there's a number of things, but he's only buying stocks when the 50-day moving average is sloping up. Sometimes I'm tending to buy stocks that have rolled over a bit, and I'm thinking that's a pullback. But he's buying stocks that are basically stage 2 in consolidation in a VCP or some other sort of consolidation pattern, but with a 50-day rising. The really good thing about that is it just helps you really very easily and quickly narrow your list of stocks. So that was a really good one. And also just getting after it a bit more. Just getting it more active. I've just been sloppy. That really goes back to, I guess, what I was just saying about lack of discipline. And the other one is I've touched on this before. I've just been getting indecisive. Now again, that probably still relates to discipline. So I've got a list of a few things I want to research to help me get more decisive. So one of the big ones is when stocks sort of just the average number of stocks that are trading above the 50-day moving average tanks below sort of 15 or 20%. That's sometimes a good time to buy. However, sometimes it's absolutely not, such as the start of the GSE and the tech wreck. So I need to fine tune that a bit. One of the I think the thing that sort of the overlays you have to have with that is there leadership? Is there new leadership coming through in tech? No, not really. There's one or two here and there, like New Relic, but that's really about it. But I do want to spend more time quantifying my market signal model a bit more. Stockbee, I think, seems to do that quite well. For example, looking at the number of stocks that are plus or minus 4%. On any single day. So yeah, I just want to go back to the books a bit on that and just research that. The other thing is that I've just got to spend less time looking at Twitter, looking at YouTube. I keep proving myself time and time again. If I just stick to the charts, my analysis, and keep it pretty simple and keep it free, mostly free of opinion, or incorporate opinion into my analysis. Does it agree with it? Does it not? And sort of learn from that. I tend to do much better. So there's a few key things I'm working on. So one thing I'm going to put orders in to sell Tesla. Now I've got a small amount of Tesla as sort of a long-term investment, so I'm just going to keep that. I bought an additional amount as more of a trade, i.e. it's got a stop loss. I've actually put an order in to sell that. Now, if we look at the chart, this is probably a textbook case where I might be just a bit too early, i.e. the 50-day has rolled over there. Now, realistically, this stock's in no man's land now. It could just keep rolling over and splat or base, or move up. But I think the jury's very much out on this one, so I'm going to hopefully overnight sell that at what I bought it for. If not in the morning, I'm just going to take some sort of loss on that. I can't imagine it being sort of a huge loss. Okay, so that's that one. Now I'm going to go through a few of the moves from last week. Put that back down again. Big moves. Let's look at Facebook. Yeah, really got totally slammed. Now remember, I was sort of procrastinating as to. I thought it was in a bit of a pullback buy, so move up for stage 2, pullback. I think sometimes indecision is worth exploring because it might be your conscious or subconscious not reconciling with your conscious, and that leads me to indecision. So in this case, at least, it's worked out for the better. Now, again, this probably goes back to the Mark Minervini thing, is if you just don't buy stocks that are sitting under where the 50-day moving average is in a negative. So it's sort of rallying up and rolling over, rallying up, rolling over. As it moving averages were all rolling over. So yeah, remember I had the options trade around, God knows where it was, here somewhere, that I closed out, saving quite a bit in the end on this one. Now I'm not going to be buying Facebook just yet because it's probably in all likely going to need to rebase. Now notice some value investors have been buying it, and long term they actually could well be right. It does look pretty cheap. It's just one of the stocks that's just really hated at the moment. But it's a cash cow. Is it in decline after what Apple's done to it? I don't know. But I'm going to keep an eye on it. This might end up being a real value player. Buffett bought Apple back in, I think it's 2016. So I'm just going to keep an eye on it. I can't see me doing anything short term though on Facebook. Google is another one, just while we're just in tech. Not really even a BGU. The volume wasn't that big. Couldn't maintain that and sort of rolled over. Now that's going to do I think it's a 20-for-1 stock split. So ideally, this is a stock I do get back into at some point, but I don't know. Tech is so weak. I'm going to try and do a better job at not fighting the tide on individual sectors. If tech's out of favour, just listen to it. Actually, the 50 days sort of also rolled up, is sort of declining now. So yeah, keep it on the alert list, but won't necessarily be doing anything sort of too short term on that one. Similar note, Bill software. Software's in the doghouse, even though it had a big, presumably that was earnings there, huge move. In fact, a lot of tech stocks did quite well on Friday night. Again, is this some sort of dead cat bounce? I don't know, but sort of rallied to the 200, 50 days declining, 150 days moving, rolling over. Is this potentially even a short here? I'm not going to buy it. Just too tough, the sector at the moment. And last but not least is Peloton. Can't see that in the chart here, but there's rumours of a takeover talk. So I think got up to 30 or so. I have no regrets not owning this thing. Who knows whether that will ever go through? And even if the takeover is at $40, well, still being hard pressed to make money. It is an awful scary ride. This might start to base here. Again, another stock that accounts actually now looks pretty cheap. But yeah, nothing for me to do for the time being until it rebases. Sectors that are doing well are shipping, energy, for example, oil and gas. I haven't got any energy stocks yet, but I've got a short list here, which I run on MarketSmith. I have bought Zim. Should have been buying that more of an upside reversal day here. In fact, I'm just going to put a little note here just to remind myself. Oops. Oh, sorry, I'm stuffing that up. Anyway, all-time highs. Another one shipper is DAC. I think it was DAC, Danos. Look at that, sort of all-time highs again. Sort of pretty much a BGU. Probably should have been buying it here. Might have got shaken out. I've got a note, when the market's in a red phase, which it kind of really is at the moment, it's just all over the place, lots of capitulation, selling. Things like BGUs, breakout stuff, typically actually quite often gets sold into. So this is an amazing strategy when the market's strong, is to buy a stock that's popular. Saying that, there's no reason why I couldn't have been buying it here on this little pullback in a sector that's very strong, consolidating, just beautifully off the 200, and bang, should have been going. So that was a case of 78 or so to 95. That would have been just a cracking little trade there. So some of the other shippers aren't quite so good as this in terms of charts, but many of them are actually holding up pretty well. As is oil and gas. So I've got my eye on a few of those. And what I wanted to see overnight is my Tesla shares to sell. I'm going to keep my number of stocks to a pretty low level at the moment. Option prices are pretty volatile, so I'm probably going to be forced to sort of stick with stocks for the time being. But yeah, preference is to buy options first, but failing that, go for stocks. Okay, I've got some remnants now of semiconductor stocks. They're all looking just pretty terrible. They're probably already now just starting the new basing period. So I might get another bite at the cherry, but like a lot of the sort of tech stocks, they're going to need to base. One that's interesting, which I probably won't do anything with, is Vista. That actually looks more like a short to me. So it was new stage 1, and then quite often when a stock's in this sort of stage 1, it's had a few guys that sort of pushing out and just fails. Pushing out of stage 2 fails, that's quite often it. So this is actually stage 3. See lots of volume picking up around here, so it's showing distribution. Fastly did this, DocuSign did this, has this sort of last gasp of air, then just gets slammed, pushed up a bit. I think it's up a bit overnight, but if I was going to short a stock, this is definitely one of the ones I'd be looking closely at. I'm not going to do it because it's not my thing, but it'd be interesting just to see how this goes. That is about